Something massive is unfolding behind the scenes, and it could change everything we thought we knew about the global currency landscape. Reports are coming in that the Vietnamese dong may have just gone live inside global banking systems. Not rumors, not screenshots, but what insiders claim are real-time internal rate updates, visible only to institutional networks. If this is true, it's not just Vietnam that could be on the edge of transformation. Iraq might be next. Stay tuned, because today we're breaking down what could be the most important currency story of 2025, what it means for the dong, the dinar, and for every investor watching this historic shift unfold. Welcome back to Iraqi Dinar News Today, where we bring you verified insights, logical analysis, and clear explanations about Iraq's currency developments and the broader financial world. What's happening right now across global financial networks is being described by some insiders as astonishing. The reports point to a massive development involving the Vietnamese dong, VND, a potential shift that's already rippling through global markets and trader circles. We're talking about claims that live rate updates are appearing inside institutional banking systems, something that almost never happens without central bank coordination. And here's where it gets even more interesting. These internal signals have many analysts asking the same question: is this the long-anticipated revaluation finally taking shape? The reports. The dong goes live. Across trader networks and global currency forums, the phrase, "the dong has gone live," is spreading like wildfire. According to these reports, institutional screens are showing new values for the Vietnamese dong, not as rumors, but as internal data visible to authorized financial operators. Now, before we go further, let's clarify what live really means. In global finance, when something is described as live, it doesn't always mean it's publicly tradable yet. It often refers to an internal activation stage, a point when global banking systems like SWIFT, Oracle, or other interbank platforms begin to synchronize updated data in preparation for public rollout. It's like the quiet moment before a major launch. The system goes live internally while the world outside still waits for the official announcement. If that's what's happening now, then this could be the final technical phase before the Vietnamese dong's updated rate is revealed to the public. Why this is so significant: events like this do not happen randomly. Exchange rates for national currencies, especially those tied to major emerging economies, are not adjusted without months, even years of planning. When insiders start seeing synchronized data updates across unrelated institutions, it signals coordination at a very high level. We're talking central banks. We're talking regulatory authorities. We're talking international financial bodies aligning systems in real time. That level of movement implies something serious, a shift from preparation to implementation. And that's why this particular story is creating such a stir. If Vietnam is truly transitioning its currency into a new valuation stage, the ripple effects could reshape economic balances across Asia, and potentially across the entire global financial structure. Vietnam's rise and why a revaluation makes sense. To understand why this might be happening, we need to zoom out and look at the bigger picture: Vietnam's economic transformation. Over the last decade, Vietnam has become one of the world's fastest-growing manufacturing powerhouses. It's not just assembling products anymore, it's producing critical components for companies like Apple, Samsung, and Intel. Massive factories across Vietnam are now embedded into the global supply chain. And this growth isn't theory, it's visible in the numbers. Exports are booming, foreign investment is flooding in, and infrastructure is improving at lightning speed. Yet, despite all that progress, Vietnam's currency has remained artificially low. Analysts have been pointing out for years that the dong doesn't reflect the true strength of Vietnam's economy. It's been a strategy, keeping the currency undervalued to drive exports. But as Vietnam matures into a more advanced, digitally connected economy, the cost of maintaining an undervalued currency rises. A stronger currency now offers more benefits: cheaper imports for producers and citizens, increased purchasing power, and most importantly, international recognition of economic strength. So if these insider reports are true, we may be witnessing the long-overdue correction, the moment when the market finally acknowledges Vietnam's true economic power. Parallel moves. Vietnam and Iraq. Now here's where things get even more fascinating, because this isn't happening in isolation. For years, The Vietnamese dong and the Iraqi dinar have been discussed together in revaluation circles. Both countries share striking similarities. Both have endured decades of reconstruction. Both have modernized their economies step by step. And both have long been described as undervalued currencies waiting for global recognition. Many analysts believe these nations are part of a broader, coordinated rebalancing effort, an attempt to bring emerging markets into fairer alignment with their actual productivity and resources. And 2025 might be the year where those efforts finally converge. Iraq's preparation and silence lets shift focus to Iraq, because what's happening there right now feels remarkably synchronized. Iraq's central bank has spent the last few years completely rebuilding its financial foundation. It has modernized banking systems, adopted international compliance standards, and integrated digital payment technologies. It's also connected more deeply to global financial systems like SWIFT and has implemented strict anti-money laundering reforms. Reports from the IMF and World Bank confirm Iraq's progress in financial transparency and inclusion. Yet despite all this groundwork, the Central Bank of Iraq, CBI, has remained unusually silent in recent months, especially regarding talk of new lower denomination notes, such as 10 and 50 dinar bills. Rumors of these smaller notes have circulated widely online, but officials continue to deny that any such notes have been released or shown publicly. Now, that silence is interesting, because in the financial world, quiet doesn't always mean nothing is happening. It often means everything is being prepared behind closed doors. Inside the quiet phase, economic analysts who monitor Iraq closely believe this quiet phase represents a strategic pause, not a delay. When a central bank goes dark publicly, it's often because it's finalizing technical and logistical details. Behind the scenes, software updates, ATM recalibrations, and system-wide adjustments take place, ensuring that when a change finally happens, it's seamless. Insiders describe it as the activation stage, a period when internal networks synchronize rates, prepare cash logistics, and ready the public information campaigns that would accompany any major currency change. So while it may seem like nothing is happening, Iraq's financial institutions may actually be on standby mode, awaiting a final directive. Who gives the final green light? That's the question everyone's asking. Who gives the final authorization? The decision likely depends on several factors: internal stability, political alignment, and coordination with international partners. Recent reports have mentioned meetings between Iraqi officials and major global financial powers, including the US, Treasury, Britain, and France. This suggests that Iraq's currency direction isn't just a domestic issue. It's being discussed at the highest international levels. And that's significant, because it shows Iraq is seeking not only local reform, but global integration, positioning itself as a trusted, credible participant in the world economy. The one-to-one idea, one phrase has captured global attention, a possible one-to-one exchange rate with the US dollar. Now, let's be clear, this hasn't been confirmed officially. But the very fact that such discussions are happening shows how ambitious Iraq's vision has become. If the dinar were ever to reach parity with the dollar, it would signal a monumental leap in confidence, stability, and economic strength. It would also mean a complete transformation of daily life inside Iraq. Smaller notes, like the rumored 10 and 50 dinar denominations, would become essential for everyday transactions. That's why so many believe that any revaluation or parity move must go hand in hand with introducing lower denominations. From controlled to floating currency, some economists predict that once Iraq achieves a stable and stronger exchange rate, the dinar might eventually transition into a floating currency, one governed by real market supply and demand rather than a fixed peg. That would represent Iraq's full integration into the global market system, the point at which its value is determined organically by trade, investment, and confidence. It's a bold vision, but one that fits with Iraq's recent trajectory of modernization, oil expansion, and banking reform. The global reset narrative now, let's zoom out even further. When both Vietnam and Iraq show signs of synchronized currency movement, analysts start using terms like global financial reset or monetary realignment. That doesn't mean chaos or collapse. It means rebalancing. For decades, emerging markets like Vietnam and Iraq have played a huge role in global growth, yet their currencies have not reflected that power. What we could be seeing now is a transition toward fairness, where nations are recognized not just for their resources, but for their true economic performance. This shift fits perfectly with the broader trend of global digitization. Central bank digital currencies are being tested worldwide. Payment networks are being upgraded for instant transfers. Transparency and anti-fraud systems are becoming mandatory. Vietnam and Iraq are both deeply involved in these modernization waves, which suggests their timing is anything but random. What it means for investors and currency holders for individuals who hold these currencies, the implications could be enormous, but patience and caution are critical. If these reports of internal activations are true, remember this. Until official public announcements are made, no one should act on unverified claims. When a currency officially revalues, it becomes visible everywhere, in banks, in Forex markets, and in public databases. There are no secret exchanges or private deals. So the responsible approach is to wait for clarity from official, regulated financial institutions. When the time comes, it will not be subtle. It will be unmistakable. The bigger picture. A new era of fair value if the Vietnamese dong has indeed moved internally, and if Iraq's dinar is next in line, we could be witnessing the beginning of a new era in global finance. One where undervalued currencies finally catch up to the real-world power of their economies. A revalued dong would reflect Vietnam's rise as an industrial powerhouse. A stronger dinar would symbolize Iraq's sovereignty, financial maturity, and return to economic strength. Together, these moves could signal a major rebalancing, not just for Asia and the Middle East, but for the global economy as a whole. The old structure of economic dominance is shifting. Emerging markets are demanding recognition, and 2025 might be remembered as the year that shift became undeniable. Final analysis, let's summarize what we know. Reports claim the Vietnamese dong is live internally across select banking platforms. Iraq's central bank remains silent but continues system-wide modernization. New smaller denominations are rumored, though unconfirmed. International coordination appears to be increasing, and discussions of parity and currency reform are intensifying in both nations. Taken together, these signals form a powerful picture, a world quietly adjusting its financial structure in preparation for a new phase of valuation fairness. Whether it's called a revaluation, a reset, or a correction, the message is the same. Change is coming. Call to action, and that brings us to the end of today's deep dive. If these developments continue to accelerate, 2025 could become the year when the long-awaited revaluations of both the Vietnamese dong and the Iraqi dinar finally move from speculation to reality. Only time and official confirmation will tell. Until then, we'll continue tracking every verified update, every central bank signal, and every credible movement across the global financial system. That's all for today's report. And remember, if you found this information helpful, subscribe to Iraqi Dinar News Today for the latest real-time updates, in-depth analysis, and clear explanations straight from Iraq's financial developments. Don't forget to like, share, and comment your thoughts below. What do you think is really happening behind the scenes right now? I'm your host from Iraqi Dinar News Today. Stay informed, stay patient, and stay prepared. Until next time, take care and keep your eyes on the markets. One disclaimer: the information provided on Iraqi Dinar News Today is for educational and informational purposes only. We do not provide financial, investment, or trading advice. All content shared on this channel is based on publicly available data and personal opinions. Viewers are advised to do their own research and consult a licensed financial advisor before making any investment decisions. Iraqi Dinar News Today is not affiliated with any government agency, bank, or financial institution.